What is the principal method of valuation under the Agreement on Customs Valuation? The principal method of valuation under the Agreement on Customs Valuation is the transaction value method. What is transaction value? Transaction value is the price actually paid or payable for the goods when sold for export to the country of importation. It needs to be adjusted by valuation factors, which are separately discussed. What is meant by price actually paid or payable? The price actually paid or payable represents the total payment made or to be made by the buyer. The payment may be made not only in the form of transfer of money, but also by way of letters of credit or negotiable instruments. Payment may also be made directly or indirectly. An example of indirect payment is settlement by the buyer of a debt owed by the seller. A commercial invoice usually reflects the total payment made. However, if it understates or overstates the price, or if it is misleading or fraudulent, it cannot provide a valid basis for determining the transaction value. Are the customs officers bound to accept the value declared by the importer as the customs value in all cases? The Agreement on Customs Valuation requires that the customs value should be based on the transaction value to the greatest extent possible. However, application of the transaction value method is subjected to the following: 1. Customs authorities being satisfied with the truth and accuracy of the declared value. 2. Compliance with the valuation conditions. And 3. Availability of objective and quantifiable data with regard to the valuation factors for making adjustment to the price actually paid or payable. In the event of the transaction value method not being applicable, customs value has to be determined by another method in the hierarchical order. What procedure should be followed if the customs officer has reasons to doubt the truth or accuracy of the declared value? When a declaration is made and the customs officer has reason to doubt the truth or accuracy of the particulars or of the documents produced in support of this declaration, the customs officer may ask the importer to provide further explanation, including documents or other evidence that the declared value represents the total amount actually paid or payable for the imported goods, adjusted by the valuation factors. If after receiving further information, or in the absence of a response, the customs officer still has reasonable doubts about the truth or accuracy of the declared value, it may be deemed that the customs value of the imported goods cannot be determined by the transaction value method. Before making a final decision, the customs officer shall communicate to the importer in writing, if requested, the grounds for doubting the truth or accuracy of the particulars or documents produced, and the importer shall be given a reasonable opportunity to respond. When a final decision is made, the customs officer shall communicate to the importer the decision and the grounds therefore in writing.
What are the valuation conditions?
The transaction value method can be applied if the following valuation conditions are met. 1. There should be evidence of a sale for export to the importing country. Such evidence may be in the form of commercial invoices, sale contracts, purchase orders, etc. 2. There are no restrictions on the disposition or use of the goods by the buyer, other than restrictions which: A. are imposed or required by law or by public authorities in the importing country. B. Limit the geographic area in which the goods may be resold, or letter C. Do not substantially affect the value of the goods. Number 3. The sale or price should not be subject to conditions or considerations for which a value cannot be determined in respect of the goods being valued. For example, transaction value will not be accepted if the seller fixes the price of the imported goods subject to the buyer buying other goods in specified quantities. Similarly, transaction value will not be acceptable if the price is established in the form of payment extraneous to the imported goods, such as where the seller provides semi-finished goods subject to the condition that he or she will receive a specified quantity of finished goods. Number 4. No part of the proceeds of any subsequent resale, disposal, or use of the goods by the buyer should accrue directly or indirectly to the seller unless an appropriate adjustment can be made. There should be sufficient information for making adjustment of such proceeds. Number 5. The buyer and the seller should not be related. The transaction value can still be accepted if A. The relationship has no influence on the price actually paid or payable, or letter B. The importer demonstrates that the transaction value closely approximates any of the test values. What are the valuation factors? Valuation factors are the various elements which must be taken into account in determining the customs value. The dutiable factors are to be added, whereas the non-dutiable factors are to be deducted to compute the customs value. Dutiable factors: commissions and brokerage, except buying commissions. The cost of containers, which are treated as being one for customs purposes with the goods in question. The cost of packing, whether for labor or materials. The value apportioned as appropriate of the following goods and services were supplied directly or indirectly by the buyer free of charge or at a reduced cost for use in connection with the production and sale for export of the imported goods, to the extent that such value has not been included in the price actually paid or payable. Royalties and license fees related to the goods being valued that the buyer must pay either directly or indirectly as condition of sale of the goods being valued, to the extent that such royalties and fees are not included in the price actually paid or payable. The value of any part of the proceeds of any subsequent resale, disposal, or use of the goods that accrues directly or indirectly to the seller, and advance payments made earlier but not reflected in the invoice. Non-dutiable factors: all discounts except retrospective discounts. The following charges, provided they are separately declared in the commercial invoice: A. Interest charges for deferred payment. B. Post-importation charges such as inland construction, erection, assembly, etc., undertaken after importation. And letter C. Duties and taxes payable in the importing country. Should the customs value include charges towards freight, insurance, loading, unloading, and delivery? The importing country has the option under the Agreement on Customs Valuation to provide in its national legislation for the inclusion or the exclusion from the customs value: freight charges up to the place of importation, loading, unloading, and handling charges associated with transport of the goods to the place of importation, and the cost of insurance. As such, inclusion or exclusion of these charges will depend on the law of each importing country. When these charges are included, customs value is based on the cost insurance freight price, and when these charges are excluded, the customs value is based on the free on board price. Should the customs value include charges for pre-shipment inspection? Charges for pre-shipment inspection are normally incurred by the importer or by the government of the importing country. Such inspection may have been undertaken as per the importing country's policy or as per the importer's own requirement. The charges are neither paid to the buyer nor paid for his benefit. As such charges should not be added to the customs value. Customs duty is often collected in the currency of the importing country, whereas the price of the imported goods may be invoiced in a foreign currency. In such a case, how is the customs value to be calculated? Article 9 of the Agreement on Customs Valuation provides that where the conversion of currency is necessary for determination of customs value, the rate of exchange duly published by the competent authorities of the country of importation is to be used. The same is required to reflect as effectively in commercial transactions. It is also provided that the conversion rate should be as at the time of exportation or at the time of the importation as specified by each importing country. The interpretative note to this includes the time of entry for customs purposes.